It's 11 p.m. The office is silent, but the air is thick with invisible tension. For one chief financial officer, a single tap on a vibrating phone is about to trigger a 48 crore rupee catastrophe. This isn't a traditional hack. There are no viruses or broken firewalls. This is a masterpiece of financial manipulation. In the last year alone, business email compromise has cost global corporations over $2.7 billion. Today, we peel back the digital curtain on the most dangerous game in the corporate world, the hunt for the CFO. What if the next urgent email you receive, the one that looks perfectly legitimate coming from your CEO, is actually a meticulously engineered financial trap? We're diving deep into the mechanics of cyber fraud and the high-stakes world of corporate targeting. Stay focused, because in this game, one missing letter in an email address can cost a fortune. This is the anatomy of a targeted strike. Why is the CFO the primary target? In the eyes of a professional fraudster, the chief financial officer is the ultimate gatekeeper of the vault. They hold the keys to large payment approvals, the influence over vendor onboarding, and direct access to the most sensitive financial data. Fraudsters exploit what psychologists call the authority bias, the innate human tendency to comply when a high-ranking leader makes a request. They also understand the immense pressure of time-sensitive global deals, where a delay of minutes could mean the collapse of a multi-crore merger. This unique intersection of high-value authority and high-speed decision-making makes the CFO the perfect mark for a digital assassination. The attacker isn't trying to break into your server. They are breaking into the mind of the person who controls the cash flow. It is a psychological war played out in the inbox. The attack doesn't start with a message. It starts with weeks of silent, invisible surveillance. Fraudsters live in the shadows of a CFO's digital life long before they strike. They use professional networks like LinkedIn to map out internal hierarchies, identifying who reports to whom and who has the power to bypass standard controls. They listen to public earnings calls, not for financial data, but to mimic the CEO's specific vocabulary, tone, and speech patterns. They even infiltrate digital calendars to know exactly when the CFO is traveling. An executive in transit, working from a mobile device and dealing with jet lag, is far more likely to authorize an urgent request without secondary verification. They study the vendor ecosystem, identifying which partners are paid most frequently and what a typical invoice looks like. By the time the first email arrives, the fraudster knows the company's internal rhythms better than the employees themselves. Enter the business email compromise, or BEC. The setup is deceptively simple: domain spoofing. The fraudster registers a domain that is nearly identical to the company's real one. To the naked eye, the email looks perfect. It carries the right corporate logo, the correct signature, and a level of professional urgency that feels genuine. One missing letter, a swapped character, or an added hyphen, that's all it takes to bypass human detection. They clone the CEO's entire email style, using specific phrases they found in public transcripts. This is the moment the trap is set. Even world-class cybersecurity teams sometimes fail to flag these because they aren't technically malware. They are social engineering. The system sees a valid email from a valid-looking domain, but the person behind the screen is a digital ghost waiting for a multi-crore payout. It is the ultimate Trojan horse of the digital age. Consider the case of Rahul, a senior finance manager reporting to a CFO. Rahul received an email from what appeared to be his CEO while the CFO was on an international flight. The email was marked top secret and demanded an immediate 12 crore rupee payment to a new vendor for an unannounced acquisition. Rahul felt the weight of the company's future on his shoulders. The email used the CEO's exact shorthand and signed off with his usual "sent from my iPhone" tag. Driven by the desire to be a high performer and fearing the consequences of a delay, Rahul bypassed the verbal verification protocol. Within 30 minutes, the money was gone. By the time the CFO landed and checked his messages, the funds had already been laundered through 3 different countries. Rahul's story is a sobering reminder that even the most diligent employees can be weaponized against their own organization. Fraudsters don't just use email, they use isolation. They impersonate the ultimate authority, the CEO or a board member, and insist on absolute secrecy. They might use AI-generated deepfake voice messages that sound exactly like the boss. Imagine receiving a WhatsApp message from the CEO saying, "Rahul, I'm in a confidential meeting for a secret acquisition. I need you to handle this wire transfer immediately. Do not call me and do not discuss this with anyone. The deal depends on your discretion." This is the psychological authority pressure tactic. By insisting on strict confidentiality and bypassing standard protocols, the fraudster isolates the target, making them feel like an essential insider protecting a secret deal. In reality, they are being led to a financial cliff. The secrecy isn't for the deal, it's to prevent the target from asking for a second opinion. Urgency is the enemy of logic. Fraudsters use time bomb psychology to force a mistake. They tell the CFO or finance manager, "If this transfer isn't completed in the next 60 minutes, the entire acquisition will collapse." Or, "We are facing a regulatory deadline that ends today at 5 p.m. This manufactured crisis forces the brain to switch from analytical, critical thinking to a primitive survival mode. Under this artificial pressure, even the most experienced executives begin to cut corners. They might overlook a missing secondary signature or skip a verification call because there just isn't time. The fraudster is counting on this operational breakdown. Every second they shave off your decision-making time is a second closer to a successful heist. It's a race against a clock that doesn't actually exist, designed to make you run straight into a trap. Sometimes the attack is even more subtle. The fake vendor onboarding. Fraudsters don't just ask for a one-time payment. They insert themselves into the company's ERP ecosystem. They send a notice from a trusted vendor stating they have changed their banking details due to an internal audit. They provide forged KYC documents, stamped and signed, that look flawlessly official. The finance team updates the master data, thinking they are just maintaining a routine relationship. But from that moment on, every legitimate invoice paid to that vendor is actually being funneled into a fraudster's mule account. This is the long game. It's not a single explosion. It's a slow, silent leak that can go undetected for months, draining crores of rupees under the guise of routine business operations. By the time the real vendor complains about non-payment, the loss has become catastrophic. To bypass internal controls, fraudsters use a technique known as invoice layering or smurfing. If they know a CFO has a signing limit of 10 lakhs, they won't ask for 50. Instead, they'll send 7 separate invoices for 7 lakhs each, spread across different departments or cost centers. This technique exploits approval fatigue. In a busy finance department, a 7 lakh invoice might not trigger the same level of scrutiny as a 50 lakh one. By splitting the theft into smaller, seemingly routine amounts, they stay below the radar of high-value audit triggers. One global firm lost millions in 7 separate transfers in a single day because each amount was just small enough to not require board-level approval. It's a death by 1,000 cuts, executed with surgical precision to ensure that no single red flag is large enough to stop the momentum of the fraud. The final frontier of trust is the video call. But in the era of generative AI, even seeing is no longer believing. Fraudsters are now using real-time deepfake technology to appear in video meetings. They use the CEO's likeness and voice to give the final go-ahead on a fraudulent transfer. Imagine being on a Zoom call with your boss. You see their familiar mannerisms, hear their unique laugh, and see them sitting in their actual office. This creates an unbreakable level of trust. After the call ends, you feel completely confident in the transaction. But the CEO you just spoke to was nothing more than a sophisticated algorithm running on a hacker's server. This is the ultimate betrayal of our digital senses. As these tools become more accessible, the boardroom is becoming a digital hole of mirrors where reality and deception are indistinguishable. The moment of impact. The CFO hovers over the Authorize button. Everything seems to align. The email was urgent, the voice message was authoritative, the vendor details were updated, and the CEO gave the green light on video. With a single click, the wire transfer is initiated. In that millisecond, the operational breakdown is complete. The money isn't just moving, it's vanishing. The silence that follows that click is the most expensive silence in the corporate world. There are no sirens, no alarms, no broken windows. Just a cold digital confirmation screen that says, "Transfer successful." The CFO closes their laptop, thinking they've saved the day and secured a vital deal, completely unaware that they've just handed the keys of the kingdom to a criminal they will never meet and a ghost they will never catch. Where does the money go? Once the Authorize button is clicked, the funds enter the laundering funnel. Within seconds, the money is moved from the initial mule account to a series of shell entities across multiple jurisdictions, from Hong Kong to Dubai to the Cayman Islands. This is layering at the banking level, designed to create a labyrinth of transactions that are impossible to trace in real time. From there, it's often converted into cryptocurrency and routed through mixes to obscure the trail even further. By the time an internal auditor even thinks to look at the transaction, the funds have already been broken down and redistributed into hundreds of anonymous wallets. The recovery probability at this stage is almost zero. The fraudsters aren't just hackers. They are expert financial engineers who know exactly how to exploit the lag in international banking regulations and the slow speed of cross-border legal cooperation. The discovery usually happens days later, often by accident. A legitimate vendor calls asking why their payment is overdue, or the real CEO mentions they were on a flight during the time they supposedly authorized the transfer. The realization hits like a physical blow. The silence in the audit room is deafening. The shock isn't just about the financial loss, it's about the psychological violation and the total breakdown of trust. Most organizations realize they've been hit only after the criminal has completely vanished from the digital grid. The recovery of funds is a legal and technical nightmare that almost always leads to a dead end. The CFO, once a hero of efficiency, now faces the hardest conversation of their career. The ghost in the machine has won, leaving behind a trail of reputational damage and shattered careers. How can a CFO fight back? The answer isn't just more software, it's better protocols and psychological armor. First, callback verification. Never authorize a significant change in payment details based on an email alone. Pick up the phone and call a known trusted number at the vendor's office. Second, implement a mandatory payment cooling period for any new or modified vendor details. Third, use AI-driven email security that can detect subtle domain spoofing and linguistic anomalies that humans miss. But most importantly, foster a corporate culture where verification is valued over urgency. A CFO and their team must be empowered to say no to an urgent request until it is double verified through an out-of-band channel. In the war against cyber fraud, your most powerful weapon isn't a firewall. It's a healthy sense of skepticism and a rigid adherence to process, no matter how high the pressure gets. The battle is evolving. As we move into the future, cyber fraud will become hyper-personalized and predictive. Fraudsters will use AI to analyze a company's public data, news reports, and social media activity to predict exactly when a CFO is most vulnerable. We will see deepfake as a service, where criminals rent sophisticated AI tools to launch perfectly synchronized multi-platform attacks. The digital battlefield is moving from the server room to the boardroom. CFOs must become cyber-literate leaders who understand that their authority is their greatest asset, but also their greatest liability. The fraudster of tomorrow won't just steal your money, they will steal your identity, your voice, and your trust. The question is no longer if you will be targeted, it's if you'll be ready when the next urgent notification lights up your screen. The war for the vault has only just begun. To uncover real corporate secrets and stay ahead of the fraudsters, like, share, comment, and subscribe to Corporate Secrets. Stay vigilant, stay secure.